Hello and welcome to the paid weekly recap for the week ending May 29th, 2026. I'm Keith Harwood, CIO of YellowTunnel, and also pictured as Vlad Karpel, the CEO and founder of YellowTunnel, and the creator of the patent-pending artificial intelligence behind the paid system. Normal disclosures before we get started: options involve substantial risk and are not suitable for all investors. YellowTunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at YellowTunnel may have a financial interest in the securities presented and the trade ideas. I also urge you to read characteristics and risks of standardized options available at the highlighted link. If you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for the week. So we had a holiday shortened week, Memorial Day. And throughout that, we had the 10-year yield continue to shift lower. Concerns over interest rate hikes and inflation seem to be waning, as crude oil prices continue to come down under expectations of a peace deal with Iran. Along with that, we had the market make a new all-time high on Friday, drifting higher throughout the week. Thursday quite bullish, Friday new all-time high. Again, this market is dominated by semiconductor and AI infrastructure investment flows right now. Stocks like Micron just continue to run higher. The market wants to continue to be bullish, and the bear just doesn't have a leg to stand on at the moment. Perhaps this weekend's lack of resolution with Iran can shift the tone, but so far, over the weekend, it looks like crude oil prices are up a little bit, but the market is not falling. As mentioned, tech continues to be bullish and a leader for this market. Monday up, Tuesday up, finishing lower from the open. Wednesday, all-time high. Tuesday up, Wednesday up, Thursday, all-time high, Friday, new all-time high. Semiconductors, again, are the driving force of this market, but not NVIDIA. It's all Micron. And we're starting to get some money flow towards some stocks like Microsoft and Palantir, but it's been very heavily dominated by the semiconductor names. Dell, another example of a stock that had a very strong performance to end the week. Small caps lag. People just aren't interested in other sectors right now. Financials, not interesting. Healthcare, not interesting. Nobody really wants utilities. It's all about the tech investment flow and expectations that things will work out just fine with Iran. And along with those expectations, we saw the VIX fall to new lows. The VIX hasn't been down here since January. The market has no concern right now. It's a very greedy market. Not a lot of fear, not a lot of hedging activity. The bull may be a bit off sides, and that could be the one concern that could set up a truly bearish tail risk to the downside that's not seemingly hedged. Puts are cheap. Implied volatility is cheap. The market doesn't seem to be worried. With that low VIX, it does allow for opportunity for smaller moves. We don't need a big move for a big profit in the option space. But the current positions in CSX and MUR, unfortunately, do have lower implied volatility as a result of the recent movement in the VIX, as well as their lower price points. CSX fell on Thursday. Looked like it was ready to really shine on Wednesday, making a new high and a breakout. Thursday, freight numbers started to become concerning, and CSX started to pull back. We'll continue to monitor this, but if it doesn't start to get aggressively bullish more this week, it may be time to exit. Murphy, with oil prices not rallying, it's not rallying. Now the options have gotten very dollar cheap. Lack of resolution with Iran may allow for a bit of a relief rally here, and that could create a better exit point. Something escalates with Iran, and we may be off to the races. But at this point, we've held this trade maybe a little bit too long, and I think it's best to probably move on and look for other opportunities that are a bit more predictable at this point. So we'll be looking at the exit potential this week if the premium increases enough to justify it. Overall, we're still seeing some strong performance out of the live trading room. We've got great ideas for earnings. We've got great ideas and other stock ideas. A lot of verticals. Verticals have been much more profitable in general because these stocks that aren't moving still get profit out of the verticals. So identifying some of the truly bullish names, sometimes a great opportunity, sometimes a little harder. Some of the names are too high dollar price to really get involved. You know, when an at-the-money option in Micron may cost as much as $10,000 per contract, it's a little bit unapproachable. But there are other names out there, and we continue to find other opportunities elsewhere. And so we'll continue to monitor those, continue to update with the live trading room, continue to give opportunities out that we see as we see fit. And if you have questions and can't join us during that live trading room, you can always email us. I'm Keith at yellowtunnel.com, and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone. Should be an interesting week.